Mr. Ramli, thank you so much for joining us today. So again, 69.3% of your loans in Malaysia are now Islamic finance driven. But for many people on the outside looking in, perhaps they're asking themselves, well, how does a bank actually make profit or actually derive growth from Islamic finance when you're excluded, when you can't deal with interest? So help us understand exactly what is the appeal and the potential for Islamic finance for Maybank's overall growth picture.
Thank you. Thanks, JP. So there's a fundamental difference and fundamental similarity. So we don't call it interest, but we call it profit. Right. So profit is something that we upfront agree to share with the client. Right, and currently, basically, what the profit is basically is still similar to the concept of conventional, where there is an amount of spread that we still charge, right, and that's at the maximum. So the concept is similar in terms of interest, but you will call it profit. But this is something that we agree upfront with the client, subject to a maximum. So it doesn't mean that we do Islamic finance, we don't get any profit from it. There is an element of profit, but it needs to be agreed upon with the customer upfront. In terms of the sharing.
Okay, so in terms of 69.3%, that's a huge chunk actually of loans issued by Malaysia's largest bank. Where else, both in Malaysia and across the countries where Maybank is operating, where do you see the most growth potential for Islamic finance at the moment?
Obviously, our focus is in Southeast Asia. We have got presence in all 10 countries. Other than Malaysia, of course, the natural base will be Singapore and Indonesia. Singapore, so there's a growing demand for Islamic finance, and Indonesia as well. But again, we are not just looking at growing asset, because growing asset, fine. We are now number 5 in the world as far as Islamic asset size is concerned. But to be number 1, we're going to utilize so much capital.
Is that even what you want to be, number 1?
No, we don't want to be known to be the biggest bank by asset in Islamic finance. No, but we now want to be the biggest bank in Islamic wealth management.
Interesting.
Right? Yeah, because we have started wealth management business maybe around 13, 15 years ago, conventionally. And again, as we move along, we realize there's a huge demand of Islamic wealth management. So just to give you a perspective, our AUM in Islamic wealth now is about 78 billion ringgit, and that only constitutes about 25% of total wealth under our management, right? So so you compare that with this almost 70%. We're going to get there. We're going to get there one day. But again, we know that the specific value proposition under wealth management that is not available under conventional, especially on legacy planning, and distribution of wealth, to your children, etc. Right, and zakat, etc. So perhaps there is, we believe that there is a natural demand for Islamic wealth management beyond the conventional, because there are pillars that are not available under conventional wealth.
Let's pivot now to the broader, the overall picture actually for Maybank. And you're coming off of those first quarter earnings where you saw pretty respectable growth of about 10%. And also coincidental, I guess, that it's the non-interest bearing income, the more halal compliant, Sharia compliant portion that actually drove a lot of the growth, despite the fact that you saw net interest income actually fall. Is the trend going to continue, or do you think that there are other risks that Maybank is perhaps adjusting or pivoting towards as we head deeper into 2024?
I must say we have got that momentum past the first quarter. So again, we started our M25 Plus strategy back in October 2022. And the key areas of focus is again about our fee-based income and what we call it core fee-based income, right? Wealth, wealth grew 70% year on year. And as far as fee is concerned, our investment banking, our fee from financing, our trade finance, and even from global markets, not necessarily trading, but rates as well as sales. So, again, we're pivoting on all this sustainable, maintainable fee income, using less capital, right, and less susceptible to interest rate